Hi guys, hope you guys are rocking today. Today is September 8th. As you can see, my background is different because we are in Thailand right now because we have a seminar happening tomorrow and also a class on Sunday. But we didn't forget to update you guys on Friday about the markets. So as you can see, the latest news is ECB is going to remain the interest rate unchanged. So what would happen to the stock market, housing markets, to the currency, stuff like that? And the main reason and the main tracking that we have to look for is the money flow, the smart money. Where will it going? Where is it going to? So before that, if you haven't subscribed to the channel, please subscribe and also like the Facebook page if you will. And the most direct way to show the support is to like this video and share this video to your friends. So the first thing is the ECB is going to have the interest rate remain unchanged, but that is not actually too healthy for ECB because we understand that Eurozone is really big, right? And the economy is pretty good. So the latest news is that they're going to increase their forecast in the for the GDP of EU for the upcoming years. So the most surprisingly is that not only the market thinks that the GDP is going to be really good in the Eurozone themselves, even the IMF, they think that the GDP forecast will be doing really good. So fundamentally, they really have to do something with the policies like QE exit, interest rate hikes, stuff like that, but they are not doing anything. Why? Because people may not understand why, because they didn't dig in deep enough into the reasons behind. The real reason behind is the inflation of the forecast of the inflation of Eurozone is not too high, so that if they're going to raise the interest rate too soon, the housing market will not be as strong. But don't get me wrong, the housing market will not fall in the Eurozone. In fact, it will be doing really good. For example, in France, Germany, and UK, but they're going to they had the Brexit already, but they are not going to be under survival mode. They're going to be another to be great again, just like in the 2003, 2004. So they really have to make a smart move rather than when to have QE exit and also have interest rate hike. So for now, we understand that the reason behind that, and then we have to look at the smart money, where is it going. So as you may know that the US dollar is going is broken below the bottom as expected. So you guys may probably have invested in Bitcoins, gold, and euros, and all currencies except the US dollar. So this is the real the reasons fundamentally and also technically. So fundamentally, I talk about that because not the US is not like the years before, that globally there's no one that can have that can go on the interest rate hike. Only US can do that. So the US dollar was rebounded quickly. But now, not only them, Canada, and also as well as the Eurozone, as well as Japan, they're not going to raise the interest rate hike just like 2007. They did a stupid thing, stupid move. They raised the interest rate 25 basis point in 2007, and then now they're really hard to recover. But even that, they're going to they're talking less and less about QE, right? Under this expectation, the US dollar will not be rebounded as strong. So the FOMC in September and also in November, the anticipation of interest rate hike is really low. But in the Eurozone, even they're not going to raise interest rate, but they are revising the GDP growth upward, and also other economy data which is doing really strong. People already know that they're not raising interest rate now, but they're going to raise interest rate tomorrow or in the future. So in the near future, the US dollar will not be doing as good and money will be leaving US temporarily. But the housing market and the stock market will be doing okay, but at least in September or even October, before or after really close to the German presidential election, the money will be, smart money will be going to Eurozone, especially to Germany. Okay, so that's my point of view. So you know that technically the US dollar has already reached my target, which is 91.3. But it can break even lower. Yes, it can. So the red line is the target. So anytime it's going below, even below the red line, it will be really a good chance for you to short the US dollar and also long the euro or even gold and Bitcoin. So for the housing market, I think generally, because what I talked about in the previous video, for the housing market, US will not be doing as good as outperforming such as Australia, especially Canada, and the housing market in Eurozone, especially in Germany, will be doing really good. So if you have any ETFs, or even you can legitimately invest in a house in Germany, that's really good. But I'm not saying that the housing market in US will doing really bad, but they are going to underperform a little bit. So don't make a big move or stupid move because of the short-term money flow. But I'm just saying that if you happen to want to buy a house in Canada or Eurozone, or you can make some easy investments such like funds or ETF in Canada or Eurozone, you can do that because it may happen in the next couple of months. I think it's the main theme in the Q4 of this year. So that's basically what we can do. And if you have listened to the previous video, we talk about the Bitcoin and gold, and again the gold is going up crazy. Okay, as you can see, there are 5 levels of, technically there are 5 levels to confirm the bottom has already, this is already a bottom. So the latest point you should buy gold is this one, the gain trend line. This is 1,330. So as you can see, the market has consensus. What does it mean? Because you see the chart is gap up, right? So people understand the target above, and they have consensus the gold will be keep on going up a lot more. So the target of gold, there's a double bottom, and the pattern has broken above, and the pattern is pointing, the target is pointing at least $1,400. So as you can see, gold is good investment. Euro also is a good investment, which I've been talking about this for the past year, because the worst time, as long as the worst time has gone, the stock market will react, the bottom will be seen. So whenever we have to look at good news and positive news to literally support the chart, that's always too late. So compared to the bottom, which happened in January or December, January of this year or December last year, that is when the Brexit was the worst. Okay, and Donald Trump, stuff like that, people really scared and panicked. That is the time to buy euro. And you have seen my previous video, I said there's a head and shoulder reversal pattern here. So as long as this neckline, you see the neckline is legit, the market will react. So again, this is again gap up. It's really rare that gold and euro and currencies will have gap up, right? But as you can see, there's a really weird gap up because the market has consensus that fundamentally and technically this is the neckline. So the target is, I've already left this arrow for really long time. So now another trend, the triangle has broken above. So I told you guys that the euro to US dollar will hit 1.2. So now after the ECB news, the stock market, the euro has made at least 1 to 2 year high. And then now I think the euro is a good investment, so you can invest in the euro as long as it keeps as long as you set a cut loss. So the cut loss should be 1.19. It's not too far away. So that's basically 5 assets that I will share about, and we can also prepare our portfolios for the upcoming events in the upcoming months. So hopefully my information is clear enough. I'll now have dinner and then I'll prepare for the seminar tomorrow. So if you like this video, please like, and if you don't understand anything, please also leave me a comment, and I will leave me comments and I'll answer your comments, answer your questions in the comment box below. So I will see you next time. Investing made easy. Ask me a question. Give me a like. Bye bye.